Okay, it's Jody Ellis here, and we're testing a new system as we've just gone into lockdown in Brisbane. Just better see what Stephen's saying.
Good to go, just hit the go live button in Facebook.
So we're just going to have a bit of a talk about a couple of things that happen at Easter. First off, there's been big changes in derivatives, and that's been effective as at today across the board, and so consequently we've had a zero crossed off our leverage capabilities, and the indexes have gone from 300 to 1 to 30 to 1. Basically, to trade 25 contracts, you need about $10,000. Minimum margin at 6,800 is about $8,500, and so okay. Just it's flashing up messages here. We're doing it remotely, as I said. We've got our technician working off-site on this. So with trading Tigers and with trading the index, we have to be much more aware of margins now than before. We can still trade 25 contracts for 10,000, but we can't really trade more than that. Now, with Easter, oil is a seasonal commodity, and people don't realise how seasonal it is. The 3-year average of oil is there up on the screen, and you can see that it's got dips in May, March and June, and then it rises with the Northern Hemisphere in August, September, October. So over the last 3 years there's been an average of $50, and now it's currently trading at about $60. With oil at Easter, oil spikes up into Easter and then trades down after Easter. So here we're seeing oil in 2017. The exact timing for the rise is difficult, and you target about 5% of the oil price. So at $60, we're looking at about a $3 spike somewhere in the next week or so. But then you notice that the fall on it can be as much as 10%. Now here's 2018. Once again, we had a bit of a spike coming into Easter, about 3 to 5%, but then the fall after Easter, about 10%. Coming into 2019, not much of a spike into Easter, and then a significant spike down after Easter. So the Easter price just before Easter Friday tends to be the highest it is in a while, and then the oil price tends to go off after that. So at the moment we're running at about $60. We're expecting the market to go to about $63 in the next week or so, but then after that we're expecting oil to come off by about $6, somewhere in that vicinity there. So that was all the individual oil spikes, and we can use that as a seasonal trade for oil. As I said, the going long now is difficult. The going short after Easter is the much easier trade, and we have modeled seasonal behavior, and we have an event. In this case it's Easter, and that creates a river in time, and we see oil rising up into Easter. Once again, hard to predict where this starts, easy to predict where this one starts. So after Easter we can go short. This is a trading Tigers trade that happens year in, year out, and over again. Now what we're actually trading is an increase in probability of market behavior because of the constrained nature of the market at a particular time. So we use Easter to constrain the market values, and we see the rise into Easter and then the fall out of Easter. Now, the reversal trade is one that we see sometimes, particularly in 18 and 19, and not so much last year, but we did see a lot of these seasonal trades reverse their diametric position and go down into the area and then rise back to fair value afterwards. So it's a 7-day curve. We actually trade with Easter for oil. It's 7 days in and 7 days out. It's a very long curve, and we can start the oil component this afternoon. If you want to catch this one, the easy one once again is to capture the one after that. Now, with the behavioral model, what we're doing, if we've got one standard deviation from normal as behavior for oil, then as we approach an event, what becomes normal is very constrained, and so our probability of success is increased. That's a behavioral model of the marketplace. So these specific times are called to action and give us very high probabilities of success. The Easter trade, as we've discussed, will normally start after Easter. The market will normally go down. Now, there's other Australian behavioural calendar day trades. They're Australia Day, March, Anzac Day, June, Queen's birthday, then end of financial year, 1st of July, September contract trade, and December Christmas trade. These are all very powerful trades in the Australian market. If we have a look at Easter on our index, we know that Easter tends to go down into on the index into our market and then come up after that. It's one that doesn't give you very much profit, but it's been highly consistent over the last 30 years. So we get from Friday, today we expect the market to go down below Friday's high, which it has done. Then on Tuesday we expect it to go down. We start to wear out and the market starts to come back a little bit by Thursday. So that's the Easter index trade, and Trading Tigers joined it here, and we're currently going down there. We're currently in profit. So the Easter map, we can see, comes down and then goes up in the last little bit on the Thursday. So here's 2018, the run down into Easter, very good, and in 2018 all targets were met. In 2019 it was mediocre in and then came out again. This is what we're looking at this year, where we have Easter in 1 week and then Anzac Day in the following week. So we have 2 short weeks, or 3 short weeks in a row. The first side of Easter, the second side of Easter, and then Anzac Day. And then Easter in 2020, we can see we didn't actually get the pull down, but we did get the push back in Easter 2020. Now, if you're interested in these seasonal trades and you'd like to know more, you can contact admin@investorcentre.com.au and they'll send you out additional information on becoming a trading tiger and how Tigers works. Tigers is currently ahead this year by about 60% from its starting account in January, so good return this year so far, powered by a very good gold trade and some mediocre index trades. We use City Index AT Pro. Now City Index, that platform is still operational, but it's not easy to find on the City Index website. So if you contact Trish at Investor Centre or admin at Investor Centre, Trish can organise a login and she can organise details for you to get the AT Pro system, which is a superior way of trading, but you can do it on mobile phones, iPhones, Androids, mobile devices, and the web interface, of course. Now, just with the change of contract, we've got City Index We're recommending clients divide their account by 1,000. So if you've got $10,000, trade with 10 contracts if you're trading quite frequently. With Trading Tigers, we say the minimum that you can do is divide by 400, and that's fairly tight. If the trade goes very much against you, you're risking margin at that. So even divide by 500 if you're just doing one trade over a few days is probably safer than divide by 400. If you're interested, you can follow me on Twitter and Jody Ellis at IC Hot Stocks. I put not a great deal of information out on that, but it is available, and you can actually see what I say about the market at that time. Thanks for joining. This has been a bit disjointed because we didn't expect to be remote with the lockdown situation and everything in Brisbane. Exciting times again for us, but we've done the best we could. And I'll look at this and think how terrible it was afterwards. Thanks for watching.